What's happening, guys? We have another Sunday video coming at you, this time for March 27th and the week ahead. This time it's a little bit different. I actually did the second part first because my camera battery was exhausted. So I actually went into pretty in-depth about a couple different setups, and one of the video topics that I wanted to cover today was sort of the dip and the rip candle and where that sentiment shifts. And I feel like a lot of people have difficulty with that. They like to anticipate the trade. And, there's nothing wrong with that as long as it's a starter. But in my eyes, a lot of people start in, and then it's just bad decision after bad decision after bad decision. You end up with 2 or 3 or 4 ads and in a position that you weren't really anticipating to be in. So I went over that on the second part, and I'm not even going to dive into it on this first part because I think you're going to like the video. We've got a couple shirts: Raul Singh, Alex Romashin, and Bush. I picked a couple from last week as well, just because I did not do a drawing on last Sunday's video. I still think that we are in a trader's market. I feel like a lot of people are still trying to figure out the banks. They've transitioned from being a day trader to all of a sudden being a bank pro and trying to figure out the best timing to buy the dip for a long term. And what happens is everybody goes in with a good idea, and they're buying it for as they claim long term. But then when it goes down another buck and another buck and another buck, guess what? You end up stopping out, and in my opinion, we're still up against the clock. It's going to take a lot more time than most people think, and that clock's going to run out. Your thesis is not going to play out in time, and you're going to end up in a situation where you stop and then the move ends up happening. So in my eyes, the edge is still being a trader. You don't need to be an investor. There's no rush to get in there. Just like, look at FRC. It is the lowest point since we started talking about avoiding it on the long side. You look at Bank of America, you look at Schwab, those things all came in a huge way. JPM and Citigroup too. And then did a small rally, and guess what? They hit more lows on Thursday and Friday before a little bit of a bounce on Friday. So again, I think that we are in a period of uncertainty, and I think that we're going to continue to have that tug of war kind of battle, which is great because it brings range every single day. You just have to wait for things to come into your wheelhouse rather than trying to maybe adjust what you were doing before, becoming an investor and trying out all these different things when really, are we going to gap up Monday? Are we going to gap down Monday? We don't really know. We're in a very uncertain time right now where we just kind of blink and this banking crisis is apparently over, and then you go flash forward another week and banks are back on the lows. So it's going to be very interesting. It's going to take a little bit of time. But again, I think trader's market is where it's at. And just try to keep those headaches away. There's not that many small caps going, so there's not as many headaches every single day. But I feel like what happens is people do the add thing on a trade that they are wrong on and end up kind of finding that headache one way or another. 2 questions that were sent in. Nate, what is your take on volume in the banking sector? Do you think it's going to stick around for a while or likely to fade out? In my eyes, it's already faded out. I think that there was a lot of headlines that they were putting out about how they were going to bail out and do this and do that. And if you notice, each time that those headlines did cross, the volume went crazy, only to unwind later on in the day or the following day. So in my eyes, they were just sort of creating liquidity, and whether they were doing that to get out or get short, we don't know. But regardless, yes, I do think that volume's going to taper off. It already has. And then at some point, whether it's 3 months, 6 months, a year, then they'll probably start their journey back up. I still do believe that we will see a couple more regionals go out. There's a couple that are trading extremely terribly, and still on lows. So it's going to be interesting to see how those play out. And maybe they don't go fully out, but folks that think that it was just 120, so 20 is a deal and 10 is a deal, and then they do a deal at 1, that could be potentially on the horizon. Next question was how to spot pivot points in volatile trading. And for instance, FRC and PACW was traded widely on both ends. So in my opinion, it's just about finding that channel. The channel's going to help you. You draw those lines, and anytime that it's above it, that's opportunity, but not until you see that exhaustion move. Most people think, okay, it broke through the level, now it's time. But what I want to see is that volume kind of exchange. I want to see a big exchange of, maybe a big cover comes in, but the offer doesn't budge. Or maybe a big seller comes in, and then from that point forward, it just stays heavy. But if you're just trying to anticipate where something is going to turn, where it's going to pivot, then that's when you end up getting in trouble. So, think that's it, because the second part of Scan, I spent some good time going over charts. So there is no video. It's just going to be charts, but I hope you enjoy it. And as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. So if you're not okay with that, shut the video off. If you're good with that, continue on. I think you're going to like the next part. It is one of the most, I would say, confusing kind of setups for people, because they always end up on the wrong side of the trade and they don't necessarily understand why. I want the sellers on the same side as me. I don't want to be, being the only seller. I want to be competing to sell with other sellers. I want the tape to change to be in favor of me when I'm looking to short. And the same thing on the long side. It's no different than if you're short and you're trying to cover and you keep on missing and missing and missing and missing. That should tell you something, that there's competition competing for your shares on the bid side. So if that is the case and you notice that happening and you're not getting your fills, well, you've got a small window to go ahead and swipe the offer. Otherwise, once everybody decides to do the same thing at the same time, that's when you get your big swipe. So that's it. Again, enjoy the second part of the video, and we'll see you in the room on Monday. All right, so this is the second part of Scan, and like I said, or at least I'm planned to hint ahead of time, I'm actually doing this part first, just because my camera was, the battery was exhausted. I just checked it, it's got 4%, so that's been about 10 minutes. Hopefully by the time I'm done this, it'll have 12 to 15% and enough juice to go ahead and knock out the first part of the video. There was a few things that I wanted to go over, one of which I think a perfect example is something like AI. The difference between starting into a trade and where does that edge form. And I think it was last week we went over AMD, and I shared my frustration that I just was pushing way too many buttons, and the reason for that is because I was forcing my bias, right? So, no matter how good the entries were, and I had fantastic entries, I had fantastic covers, but I had this bias that, kind of made me want to keep a core. And so we were talking about exactly that. And it's really a situation of, are you looking to work for the trade or let the trade work for you? And AMD was definitely a situation where I literally worked for the trade. I essentially worked for free, right? Like I had said, if I had covered it all on the flushes, then it would have been a good trade. But I had this bias that kind of forced me to keep a core. I felt like it was a good idea at the time. Because I was pretty confident that we're going to have a steady unwind, and I wanted to have a little bit on just so I could continue to scale and scale and scale. Meanwhile, we were just above the support level, and not once did it breach. And if it did test it, it was short and sweet, and it moved on. It continued to go higher. So AI is a very, very similar situation where I didn't get in a fight with it. I didn't get overly biased. I didn't force what I think should happen. I waited for it to prove to me that that's what wanted to happen. So that's the difference between a good trade and a bad trade sometimes. And so AI did the same move Thursday and Friday, and it was very much just about kind of letting the trade develop and show its hand. So you had this nice little failed follow through setup here. You had a little bit of a base starting to form, lower highs finally. But even here, sure, in hindsight, you can go back and say, yep, this would have been great fade and cover here. But that's still sometimes not enough good information, especially if it's a mover like AMD or something like that, where I'd actually rather it come back up and retest that prior level of resistance and basically exhaust out and fail to follow through. And then you have a nice, good risk to reward type of trade. We actually had the same situation again on Friday where, for in the room, I always have no problem putting on a little bit. I always talk about this on the video, but you put on the starter. And for some people, they put on a starter and it's not really a starter. But for me, if I say I'm starting in small, if I say it's a starter, if it's a feeler, whatever the case is, that's what it is. And I'm very good at not add, when I'm wrong. And so sometimes you just have to get in the tape. You just got to get in there to get a feel for what's going on. And so the level that I started to focus on was 26. So I started to get in there, just one entry just to kind of feel good about, the trade unfolding, get a good read on it, and really sink my teeth in on the key levels. So there's a whole bunch of action. You've got this nice parabolic move, comes back, ramps up again, and you could start to see that it's forming a little bit of a base over here, starts to rally up. It's got a little bit of resistance here, and so on and so forth. However, each time it ramps through, it comes flushing back, and that 26 level holds, right? So, you could add here, and it would have worked out. But we don't have that information at the time. We don't have the beauty of hindsight to make decisions in real time. So what makes a good trade? For me, this is a clear failed follow through setup, right? We've seen this a million times before. I've always told you to kind of memorize this pattern, right? So you still don't know if that's not going to knock out new highs later on. So if I were to scale into this trade because of this failed follow through, I want to make sure that I am proactively covering into this 26 level. If I am not good at that, and you guys know best, you guys know whether or not you're good at doing the right thing each time and taking off a trade when you've maybe sized up and it's just not ready yet. You know that answer yourself. Some people are great at it, great risk management. Some people, that's the first step to creating a really, really bad trade. And so what I tell those people and what I always focus on is once I get in that trade, I focus on where it flushes to, and then I start to use that level as, okay, that's the spot where the sentiment will shift, right? And, in this case, it was 26. So again, if I decided to use this failed follow-through setup, it's more of a reactive trade. I'm anticipating the fact that it's going to flush. And I have a proper risk reward type of setup. I want to assume that it's going to have trouble and it's going to probably hold around this 26 level. And if that is the case, then I can always rescale if it stays heavy. And then you revert back to the prior levels, comes back, exhaust out over the 26 level, and then we have that nice unwind throughout the day. So 2 days in a row, same sort of trade, same sort of thought process. But the key takeaway that I want you guys to kind of see here is that, it's fine to start in, but what I do is on the dip and rip candles, right? So if you're on the front side of the move and it starts to speed up, you had a good entry, and you feel good about, the fact that it just flushed out. Well, what if it flushes out, comes right back? At that point, I draw a line at that base, wherever it is, and that is the level to remind myself not to scale against the trend. You're either going to work for the trade or you let the trade work for you. And if you're going to be trading it short above that level, number one, you have to be proactive. Number two, you're going to be making a lot of adjustments. And number three, you're going to be doing the heavy lifting, not the name itself. So just keep that in mind. But very, very clean, great example of AI on Friday. Great opportunity in the room. And we had a bunch of other, great kind of setups and great opportunities like that. Just by being a little bit more patient and kind of letting things break down. And, another example, over the last couple days, ETNB's been going pretty nutty. And same deal with 1370s. And 1370s, the day that it was running, the first day, it had come down. It pretty much was hugging those 1370s all day long. So if you are taking this failed follow through setup, which this should look pretty familiar here. You guys have seen this a million times. I just pointed it out on AI. If you participated in that, you should assume that this level, 1370, 1380s, whatever you want to call it, is likely going to hold. In the event that it exhausts out, fails to follow through, then that's when you have your patience trade. That's when you have the trade working for you instead of you working for the trade. Then, flash forward to the next day. What information can you use from the day before to make an educated guess as to where this might base? Yes, probably looking left, probably at the same spots from the prior days. We zoom in, and here comes the next day. And this is like the pre-market, 8:30, 9. Then it comes down, and it flushes off the open, and what does it do? Dips, and it rips right off that level. So we know 1370s is that key level. If you're going to be patient, if you're going to be looking to short, you're fighting it over this level. Same concept, same kind of theory. Draw that line. When it flushes, pay attention if it gets caught back up real fast. I personally would rather be adding as things continue to fail. The biggest issue that I think that a lot of people get into is when they see something, quote unquote, fail, they jump all over it. But it could be a little walk down, slow and steady, slow, steady, slow, steady. And you're right until the swipe. And as soon as it swipes back, that's it. So personally, for me, I'd rather start to position in a little bit more size after a swipe confirms my thesis, my thoughts, my bias. Because a lot of times you'll realize that it may not actually prove your thesis, your bias, your thoughts correct. So don't be afraid to let it prove to you first, is the point here. Make sure you draw a line where it flushes. And look, you might draw 4 or 5 lines on the way up, but you know what? Those 4 or 5 lines on the way up are going to keep you safe. They're going to remind you where the level, essentially changes the trend. And most importantly, if you draw 4 or 5 or 6 levels, that could have been 4 or 5 or 6 spots where you typically would add into a loser. So it's a visual reminder not to screw with the trend, not to fight against the trend. And really, that's what it comes down to. On that same note, I always like to look at, where was the prior highs? Where is it having trouble? So if we have some sort of exhaustion move way over that key level and it exhausts out, I like that trade for a reactive trade. Why? Because I know the majority of the market, the majority of the volume, the majority of, what likely is going to become a ceiling is right in this range. So if it goes up on air, $1.50 straight up, then there's a good edge for my style of trade. Not everybody's good at this, but if there is a good failed follow through setup, exhaustion move, exhaust out a few times at 18, there's a good chance that it's going to want to go back and retest. You should assume that 17 becomes the new base, but if not, and you want to be extra cautious, extra safe, let it flush out, come back, and you can see this candle right here. Nice reject, right back and failed back down. And then steady fade from there. We ended up breaking the pricing of the 1625 of where they raised, and it ended up being a fantastic trade. Posted that one. Hopefully you guys saw it as well. So that is exactly what I wanted to talk about today, and we'll get right into scan for tomorrow. But once again, I apologize that the video camera was not working, but I feel like this would actually might have been a little bit better with just the video only. Let's see if I am missing anything. Nope, I think we're good. So let's just jump right into the main watches. So main watches for me, AI. And as you guys know, when I talk about main watches, those are the ones that are most liquid, most exciting. To me, they may change by the morning, but what I do is I try to zone in and focus on the ones that are going to be the highest reward for the least risk, the best liquidity. I don't want to trade low volume crap. I don't want to get into circuit halts. I don't want to trade low float small caps with much size anyway. I'm all set with that. So I'm always focused on what has the best range, the best volume, the best liquidity, and that's where my A pluses start to come from. So AI, I would be using the same levels as before. That's the beauty of drawing these levels. You can also save your desktop, and then you come back the next day, and all of a sudden, you can see all your levels, and you can remind yourself where things matter. And it's very helpful also setting those price alerts. So for example, right now, if I wanted to prepare, I could be going right now and setting a price alert for 2560, 26, and maybe something like 2460s, 2470s. And there's a reason why I'm setting all of those alerts. It's because it's the prior level of resistance that might actually the prior level of support, which may act as resistance, or this 2460, 70 level is the prior level of support, which if it breaks down and starts to fail to follow through, now we have that sentiment shift potential unwinder type of trade on our hands. So setting those two price alerts allows you to take this off of radar and just wait for it to hit. So ideally, exhaustion move into this upper level here is 2560s, all the way up to 26 would be ideal. And then potential failed follow through. I would be proactively covering on flushes until this level starts to camp out as the high. Other than that, we've got Riot and Mara, which have been continuing to provide some really, really nice opportunities. Bitcoin did pull back a bit this weekend, and it looks like it's been on a nice rally back. It went down to 27.2. It's at 27.9, 28 as I'm talking about this. 28 has felt like the real key level. That's, if Bitcoin names are staying heavy, if it's under 28, if it's over 28, they've been kind of, bidding up. So, again, understanding, what makes an outlier trade happen would, in a situation like this, would require Bitcoin to, be 30,000, 32,000, or 27, 26,000, somewhere away from, let's just say 27.5 to 28,000. And the reason for that is because that's the consolidation. That's where it's been kind of hanging around. So if you're going to have some sort of unwind on Mara, we need to be breaking down overall. Otherwise, you should just be trading the trend and not trying to, hero trade it and nail this huge trade, because at the end of the day, Bitcoin is not suggesting that. And when you're trading something that's based on something else, obviously they're their own companies and whatnot, but the Bitcoin price 100% influences sort of, what's going on over here. So without that, Mara, Riot, Coin, you need to be trading sort of what you see rather than, what you feel, in the sense that if Mara and Riot flush out and Bitcoin just chilling, that flush is probably a good edge, because even though it looks so weak, it looks like it's going to fade down, it's not agreeing overall with the big picture sector style move. When you're trading a sector or a theme, it's all dependent on the big one. And in this case, that's Bitcoin. Other than that, we got ETNB. ETNB, higher the better. We already went through this as far as sort of what I look for. But let's look. You clearly have 1630s, and you clearly have pretty much like a 15, maybe 80s or so kind of channel, right? So the edge for me is some sort of parabolic exhaustion move versus that 17 level, or as far as patience, it'd be under 1580s. One thing to kind of consider is there's a good chance that it's going to consolidate around that 1625 range, which is the pricing from Friday. So I think we will have maybe one more sort of reactive trade like this off the open, one way or the other, and then it's probably going to start to go into a consolidation pattern. Next up, we've got BBIO. BBIO had a huge rip into the close. Some talk of interest, big pharma, blah, 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 oddly 10 minutes before the close. So, who knows? For me, I did trade it. I actually didn't realize I have a couple, not a very big position, but I still am short a tiny, tiny bit. I didn't realize it until I brought my platform up this morning. But at any rate, I had shorted some into the 18 rip. And the reason for that is because they had just raised 8 million. They had just priced 8 million shares at $17, right? And it was a super heavily retail crowded name, and it had faded off since. So this is just a little bit suspect that it was 10 minutes before the close on a Friday. But knowing that we've got a large overhang of recently priced paper, there's a good chance that it's going to hover around here. Now, does that mean that it's an auto short? Does that mean that it has to peak out at that level? Absolutely not. But there is a good chance that it's going to run into an issue there. So that is why I put out that kind of idea that pretty much everything over 17 was, kind of an opportunity or a present, for lack of a better word, after hours. But we'll see how that pans out. Again, if it absorbs and holds on, then, forget it. SI, huge move, really nice. I actually kind of was chuckling about it pre-market. I was like, man, this thing's 107, 108, whatever it was. And it turns out I should have been buying. But at any rate, nice rip. And, we could easily gap right back up into the 190s level. That would be ideal for me. I would love to see that. My goal that I had written early on, I think it was around 170s, was that I was hopeful for 220s to 250 and then a fade back to 170s. So we got exactly that. We got, I think, to like what did we get to? I want to say it was like 218 or something, 217. So almost there, but right back to the 170s. So ideally, we get some sort of move towards the 190s and then possibly fade back. But again, this is going to be, it's a very high short percentage float, very heavily hated and shorted, and just the investors got smoked on this thing. So there's a lot of people that are probably down 99.9%. And the point is, just don't underestimate it. If it traps off the open, starts to go, this has plenty of room. It had 141 million volume. It's got a big short percentage, like I said. So, could this continue to go? Absolutely. But wait for it, let it exhaust out. And, you can see the nice failed follow through setup over here. And that's what I'll be looking for. So am I excited about, just getting short on it? No. I want to see it blow out 190s again, fail, and then give a nice opportunity. If it were to dip, flush off the open, 160, 165, or even put the SSR on and come back, I'd actually be interested in potential, rally back for a squeeze. Could break on Friday highs, so we'll see. FRC, this is just kind of the daily driver, that WAL, PACW. I always have them all up. I see one starting to get heavy. I might scale across the others. There sometimes is a little bit of an edge while you see FRC hammering, PACW and W still have some time to get in, and then, ends up being a good scalp. So, I don't go, crazy size on any of these, but it is, to me, a little bit of a no-brainer. If something starts to hammer and the other ones haven't, it's a low risk to reward type of trade that I like taking. Continuation side of things, GBNH. So we've got this one that just wrapped up on, no volume, came back. I'm hopeful that a lot of people got short based on some of the filings. They don't have warrants registered yet. They still can raise. They are restricted by the baby shelf, so I'm hopeful that it wrapped up enough, and this kind of flush got enough people interested to, get short, and we'll see what happens. I'd love to see some circuit halts on this thing and craziness, but if not, then I'd probably be looking left. Ideally, get some 130 shove, and then failed follow through and go from there. But for now, I have it under continuation just because I feel like this is one of those where, when we don't have a lot of small caps, everybody starts to kind of gravitate towards that one, shorts that, ends up in a bad position. We go into a circuit halt, and, things are fun. And last two, ZVSA. ZVSA, nice grinder. No position on this, but definitely interested if this holds. This is a liquidity trap situation, 9.7 million volume down to 677,000 shares. So if dips hold, then we have the potential of, a nice little breakout. And this kind of action, to me, showcases either somebody getting bought in or somebody accumulating and trying to kind of not be noticed. So we'll see what happens with that. And then VORB, VORB, I have it under continuation. Will I short it? Probably. But I am hopeful that, maybe we fill that gap, get back up into, ideally that VWAP level on the daily. That would be amazing. I not all amped up, not all bullish about it, but, I am hopeful that, we get into a buck or something like that, and it really gives a big move. Just higher the better opportunity for us. So that is it. So hopefully you guys had or learned a decent chunk with the dip and rip candles and sort of how I use prior lows as a guide. And if you liked it, let me know. Use the comment section. As always, the drill. I'm going to pull a few folks out of the comment section for t-shirt, scans, Icon Meals, IU, you name it. We give it away. Otherwise, we will see you in the room tomorrow.